Crypto is on this evolution from this niche alternative idea that's mainly the community of computer scientists and geeks to a mainstream asset that sits alongside the US dollar, gold, and other assets as part of the financial firmament. And ETFs are sort of the biggest milestone in that journey.
On WealthTrack, has Bitcoin gone mainstream? Are cryptocurrencies at a tipping point? Matt Hougan says yes.
Funding provided by ClearBridge Investments, the Fairholme Foundation, First Eagle Investments, Bill Miller, Baird, Strategas Asset Management, Research Affiliates, Royce Investment Partners, Seafarer Capital Partners, and Women Investing in Security and Education.
Hello and welcome to this edition of WealthTrack. I'm Consuelo Mack. When WealthTrack launched 20 years ago in 2005, Bitcoin didn't even exist. The cryptocurrency made its debut in January of 2009 in the midst of the global financial crisis, when the global financial system was being rocked by the bursting of a credit bubble. What better time to introduce a digital currency not subject to the vagaries of traditional market and regulatory forces? Except very few investors knew about it or were interested in something created in a white paper by a still unidentified Satoshi Nakamoto. It was a very slow start. The market capitalization of Bitcoin and eventually Ethereum and other cryptocurrencies were flat until 2017, when they took off on a wild ride to periodic new highs with dramatic downdrafts, but mostly significantly to higher lows. Today, the market capitalization of the total crypto market exceeds $2.5 trillion. Morningstar recently put it into perspective, noting that crypto's risk-reward profile lies at the far end when compared with other risky assets such as stocks. Since September 2015, Bitcoin has been nearly 5 times as volatile as U.S. stocks, and Ether has been nearly 10 times as volatile. This outsized level of volatility means that even a small amount of cryptocurrency can dramatically increase a portfolio's risk profile. But who cares when you are making money? And loyal Bitcoin investors have made fortunes. Wall Street has taken notice. The firms of former crypto skeptics like BlackRock's Larry Fink and JP Morgan's Jamie Dimon are in the game, offering crypto products to customers. The biggest event bringing crypto mainstream was the launch of 11 spot Bitcoin ETFs in January, which also happened to be the biggest ETF launch ever. We are talking billions. The 3 biggest ETFs, BlackRock's iShares Bitcoin Trust, had nearly $20 billion in assets recently, as did crypto specialist Grayscale Bitcoin Trust ETF. And Fidelity's Wise Origin Bitcoin ETF had $11 billion. Well, this week's guest has been a digital currency believer, analyst, and entrepreneur for years. He is Matt Hougan, Chief Investment Officer and former Global Head of Research at Bitwise Asset Management, a cryptocurrency asset manager founded in 2017. Bitwise has created several crypto indexes and launched the world's first and largest crypto index fund, the Bitwise 10 Crypto Index Fund, which holds the 10 largest crypto assets weighted by their market capitalization. Bitwise was also one of the first creators of a Bitcoin ETF, the Bitwise Bitcoin ETF, which also went public in January and recently had $2.5 billion in assets. Hougan is a noted trend spotter. He was involved with the ETF industry in its early stages as CEO of ETF.com, so he's just come full circle. I asked him how important these Bitcoin ETFs are to crypto's future.
They're a complete game changer for crypto. Crypto is on this evolution from this niche alternative idea that's mainly the community of computer scientists and geeks to a mainstream asset that sits alongside the US dollar, gold, and other assets as part of the financial firmament. And ETFs are sort of the biggest milestone in that journey. All of a sudden, you have the SEC blessing an investment product that provides exposure to Bitcoin. Not saying you should invest, but saying that this is a product like other products out there. All of a sudden, you can buy Bitcoin exposure in a traditional brokerage account in your Charles Schwab or your TD Ameritrade or your E-Trade account. And all of a sudden, the largest institutions in the world can now really easily hold Bitcoin in their portfolio. So it's a huge milestone in the mainstreaming of crypto. I think we call it Bitcoin's IPO, and I think that's a fair way to think about it.
How did this happen? Because Larry Fink in 2017, referred to Bitcoin as an index of money laundering.
Yeah, it's part of the maturation of a disruptive technology. If you think back over time, like think back to the early days of the internet, people were very skeptical about the internet. A lot of famous technology and media executives said it would never amount to much. Newsweek ran an article about, it's time to give up on the internet. People are reflexively skeptical of new disruptive technologies. But as they mature and gain mainstream usage, smart people change their attitudes. So I think if you look at what BlackRock did, it's really courageous. They took an initial view, which was very skeptical of Bitcoin, but then they studied it over a number of years, realized its disruptive potential, and now not only have they launched an ETF holding Bitcoin, they've launched money market funds that trade or are structured on Ethereum, another cryptocurrency. So they see this as a big part of the financial future. I think it's a classic story of a technology emerging, maturing, and people understanding what it could mean long term. And I think it points in a very positive direction in terms of where we're going.
So before we get to we've arrived and everything's hunky-dory, what about the money laundering factor? I mean, how big a factor is that still in the cryptocurrency world?
Yeah, it's diminishing rapidly. And you don't just have to trust me on that. You can listen to what the Department of Justice and others are saying about it. The evolution that's taken place, the reason it's diminishing is that the institutions that provide sort of trading services around crypto, companies like Coinbase or offshore entities like Binance, over the last few years, they've put in place significant AML, KYC, or anti-money laundering, know your customer technologies that look a lot like what you see at traditional banks. And so when there is now criminal or fraudulent activity in the crypto networks, they can seize assets, they can say who they belong to, and they can help law enforcement deal with that. And so what we've seen is the share of illicit activity on these crypto networks fall dramatically. The leading data providers like Chainalysis say it's now, regularly below 1%, which is on par with what you see in traditional currencies. Could it be better? Of course, but we've made huge progress. Now the mainstream use of crypto is by institutions and mainstream investors, just like it is for other assets. So we've made a lot of progress over the last few years.
Matt, I'm looking at the ownership that Bitwise had in its first quarter review this year. And so its individuals are 57%. Amazingly, inactive, 17.6%. Are these people who just forgot that they own Bitcoin? I mean, it's 3.7 million Bitcoins.
I think part of it is people who have lost or forgotten that they own Bitcoin. It sounds ridiculous today. Bitcoin is $65,000. How could you misplace it in your sofa cushions? But you have to remember a lot of people in the very early days when Bitcoin was worth a penny or 2 pennies or 3 pennies, they may have bought a few hundred or a few thousand Bitcoin and written down their password to control that Bitcoin on a piece of paper and lost it. So there is a significant portion of the Bitcoin market which hasn't moved in a long time and is presumed to be lost. That's probably a couple million coins. And then there are a lot of investors who just don't plan to sell their Bitcoin, or they plan to sell it when it hits $100,000 or $1 million if it ever gets there. I think that's a big part of the Bitcoin ethos, is just buy and hold, or hodl as they say in crypto, for the very, very long term.
Satoshi Nakamoto, of course, that's the pseudonym for the person or people who supposedly created Bitcoin in the first place. Do we know who, they are?
No, it's one of the...
Any ideas? I mean, this is one of the great mysteries of finance.
It is one of the great mysteries of finance. Think about that. Think about creating a technology that's now used around the world, that BlackRock now has a $20 billion ETF in, that governments are talking about, that there are debates in Congress about, and then not claiming that ownership. And then think again about having billions of dollars and not selling any of that or using any of it. You have to ask why that's happening. And the reason it's happening, I think, is that Bitcoin emerged from a sort of philosophical point of view that there should be this alternative to traditional systems. You shouldn't have to trust the government. You shouldn't have to trust banks. You should be able to trust just yourself and your community to have your own form of money. It was a very sort of honest or giving development. And so this person,
Utopian, I'd say.
it is,
That's
it
another
is.
word for it.
Absolutely. But this creator decided not to monetize that, just to give it as a gift to the world. It's really a phenomenal thing. And it speaks to this being an entity that's not owned or controlled by any one person. You know, Satoshi doesn't tell Bitcoin what to do. They created it, and now the world controls it. It's a really unique situation.
But that goes back to the identity of who these owners are, because really we don't know. I mean, we don't know who the inactive owners are, and we don't know who Satoshi is. That's over 20% of the Bitcoin market. So we really don't know the identities, right? Isn't that a potential issue?
Well, it's a potential issue or a potential benefit. You know, I think people have some degree of right to privacy in their finance. Where we should investigate and worry about it is if they do bad things. And as I mentioned, sort of the share of bad things that have happened in the crypto network has been declining rapidly. If you just want to hold wealth and keep it, I'm not sure I have a right to know exactly how much you have or what you plan to do with it, as long as you're not doing anything bad with it. And Bitcoin provides that financial privacy, which is frankly broadly missing in today's society.
You have broken down Bitcoin's performance into 4 different cycles. There's the Bitcoin cycle, what you call the Bitcoin cycle from 2011 to 2014, the Ethereum cycle from 2015 to 2018, the early application cycle. Again, these are names that you've given the titles, 2019 to 2022, and you're saying we're now in the mainstream cycle, 2023 to question mark. So just take us through those cycles and explain like where we are now and how significant that is for Bitcoin investors.
I think this is really one of the biggest keys to understanding the Bitcoin market as an investor. You know, if you look at the annual returns of Bitcoin in each year, it has this incredible pattern of 3 massive up years and then a year where it resets. So you mentioned the first cycle, the Bitcoin cycle. 2011 was the first year that individual investors could buy Bitcoin. Before that, you had to be basically a computer scientist. But in 2011, we had Coinbase launch, we had the first custodian launch, and that created a lot of excitement, created this giant bull market. And you saw huge up years in 2011, 2012, and then 2013. But we all know from economic history that you often get booms and busts. And so crypto grew too rapidly, and then it reset in 2014 when the largest custodian failed because it wasn't up to the snuff of holding multiple billions of dollars. And a lot of people wrote off crypto. But guess what? It boomed again in 2015. And what happened then was we had a major technological breakthrough. We had the creation of Ethereum, the second largest crypto asset, the first programmable crypto asset. And that kicked off a 3-year bull market with huge investment. And eventually we overreached, reset in 2018. The next cycle, 2019 to 2022, we had the first sort of applications that were built on Ethereum. Maybe the best known one are stablecoins, which are just digital dollars that trade on blockchain networks, which means that anyone around the world with their cell phone can sort of have access to a US bank account. They can buy US dollars. That's an incredible application. And that and other applications spurred 3 big up years. And then we had 2022, which I'm sure you remember, a big crypto reset, things like SBF, multiple bankruptcies. But that's part of the natural cycle of any asset that's giving Bitcoin-like returns. We've called this the mainstream cycle of crypto because we think this is the cycle where crypto goes from a niche asset to an asset that everyone or many people hold. So examples of that are the launch of Bitcoin ETFs. Examples of that are BlackRock coming into the space, Fidelity expanding in the space. Examples of that are the US Congress sort of in a bipartisan manner working together to push forward crypto legislation. We think, again, we're going from niche to mainstream, and that's a huge potential bull market because mainstream investors control trillions of dollars of assets and they're just starting to invest. So we think we're about in the middle of that cycle. I think there's years to run in this. And inevitably, at some point, there will be a reset. But right now, it's a very exciting moment in crypto and in Bitcoin.
There's something else going on, too. I guess that Bitcoin has halved 4 times since 2012. And each time in the next 12 months, it's had a huge gain. So we just had one in April, right? It halved. What does that mean when Bitcoin halves?
So every day, a little bit of Bitcoin gets created on a schedule that was established by Satoshi back when he created Bitcoin in 2008, 2009. And every 4 years, the amount of Bitcoin that gets created falls in half. And it doesn't take that much to understand why Bitcoin has traditionally rallied in the year after these halving. If I told you that the amount of oil coming out of the ground next year was going to fall in half, you'd probably be pretty bullish on oil. The same dynamic is true in Bitcoin. You reduce the amount of new supply. And so if you have the same level of demand, the price tends to appreciate. The unique thing about this halving cycle is we reduced the new supply in half around the same time that these ETFs launched, which attracted billions of dollars in assets. So you had less supply and more demand. And that's why Bitcoin traded to a new all-time high. It's why I'm optimistic for the next 12 months and beyond.
Just going back to the ownership. So the miners evidently, again, according to Bitwise Asset Management's figures, are 3.4% of the Bitcoin outstanding. And to be mined is 6.6% of the supply, right? I know Bitcoin is limited in what the supply is.
Almost all the Bitcoin that will ever exist already exists, which means if there are new people who want to buy it, they have to buy it from somebody else who's willing to sell. There's only a little bit more Bitcoin, left to mine, about 6%, as you mentioned.
Bitcoin and Ether are the two most widely used cryptocurrencies. 70% of crypto's global market cap and more than half of all trading volume. Are you at all concerned about the concentration in the market?
No, in this space, network effects are real. If you take something like Bitcoin, the fact that it's so big, it's so accepted in hundreds of, more than 100 countries around the world, has the most liquid market, that makes it better as a form of money. That doesn't mean there aren't other small public blockchains and crypto assets that are bubbling up and are really interesting. I suspect you'll hear more about assets like Solana in the coming years, because that's another interesting way to use blockchain technology to provide new services. But to be sure, Bitcoin and Ethereum are, the gold and silver, or the salt and pepper of the crypto market. They're the majority of the market. And that's, probably going to stay that way in the future. Not certainly, but probably.
So the Bitwise 10 Crypto Index Fund, the first and largest crypto index fund, you've got 10 of the largest cap crypto assets in that fund, and Solana is the largest.
Solana is an interesting crypto asset. If you think of Ethereum, what makes it interesting is it's a programmable crypto asset, so you can build things like stablecoins on it, those digital dollars. You can build other applications on it in a manner similar to how you can build applications in the Apple App Store, but more for open finance. Solana is a competitor to Ethereum. Its advantage over Ethereum is it's a little bit easier to use, and it is faster, can process more transactions, and it has a trade-off for that, which is it's more centralized than Ethereum. And who will win in this market? Well, right now, Ethereum has the leadership position, has the most developers, the most applications, the most revenue, the most uses, and it's, probably going to stay the winner, but don't count out Solana. For investors, this feels a lot like any other area of software, right? You can think of Salesforce being the dominant, CRM software, but there are other startups that are trying to eat away at that. You can think of Microsoft for word processing, but there are other applications that people are using. The same thing is true in blockchain, and Solana is just an ETH competitor with some advantages and some disadvantages.
What is the area that you are most excited about, that you think that we're going to see, kind of above average growth in the crypto asset space?
I'm really excited about some of the developments we're seeing on Ethereum specifically. I mentioned this idea of stablecoins. I'll go just through two developments quickly. Stablecoins are digital dollars that are built on blockchains like Ethereum and that people can access anywhere around the world. And if you go to a country that is facing extremely high inflation, doesn't have a stable currency, has financial controls, the ability to access dollars from your pocket is an incredible application that can do incredible good in the world and also be good for the US economy because it exports the dollar to those markets. I think that's going to be a multi-trillion-dollar market. It's about a $160 billion market today. The other one that I would call out is tokenization. This gets a little bit in the weeds. One of the funny things about Wall Street is things trade in archaic ways. We trade stocks 6.5 hours a day, 5 days a week, and then they take a day to settle. That's ridiculous. You can get an elephant delivered from Amazon in a few hours, but your stocks take a day to settle. Tokenization is the idea of using blockchain rails instead of traditional rails like the New York Stock Exchange to settle securities and other assets. And we've seen BlackRock, I mentioned, launched a money market fund built on Ethereum. It raised hundreds of millions of dollars. It trades 24/7, 365, and it settles in a matter of seconds.
And the role that Bitcoin, for instance, plays in a portfolio. I mean, you mentioned that you think that eventually it could overtake, gold as a store of value.
I like to make an analogy to hot sauce. I like hot sauce on my food, but only a little bit. But a little bit makes the food taste a lot better. And that's what we see when we do the math on Bitcoin's impact in a portfolio. If you look historically and you add 2.5 or 5% Bitcoin or even 1% Bitcoin to a portfolio of stocks and bonds, and you rebalance it just like you would any portfolio over meaningful time periods, so more than 2 years, it almost always boosts your absolute and risk-adjusted returns because it's had high returns and it has low correlation to those stocks and bonds. So a little bit goes a long way.
And are ETFs the best way to go, Matt, do you think?
The thing I love about ETFs, and I've loved this since I was the CEO of ETF.com, is they let individual investors like you and me invest on the same terms and in the same way as the largest institutions in the world. So with a Bitcoin ETF today, you can buy a Bitcoin ETF with an expense ratio of 20 basis points, 0.20%. You'd have to be investing billions of dollars in Bitcoin in order to get that kind of pricing from the best institutional custodians and trading firms. But instead, you could put $10 into Bitcoin through an ETF and get that level of pricing with all the assurances of being a regulated product that's audited by a firm like KPMG that relies on the best custodians in the world. It's an incredible deal for most investors. So yeah, I think ETFs are the best way for many people to allocate to the crypto market.
So the one investment for a long-term diversified portfolio, and I'm going to tell you, the last time that you were on, which was in 2022, you recommended Ethereum, which was trading a little over $1,000.
If I were investing in crypto right now, making one actionable investment, I would buy on a 3-to-1 ratio some Bitcoin and some Ethereum. So 75% Bitcoin, 25% Ethereum. The reason I would do that is that's about their market cap weight. So that's like an easy index you can do yourself. And then you have the majority of the market. Then set it, forget it, and we'll check in a few years to see if I can top that Ethereum return.
I look forward to talking to you again, Matt Hougan, and I'm sure there are going to be a lot of new developments when we do. So thanks for joining us.
Absolutely. Thanks for having me.
At the close of every Wealth Track, we try to give you one suggestion to help you build and protect your wealth over the long term. This week's action point is consider owning some cryptocurrencies. As the late, great risk expert Peter Bernstein used to tell us, to be truly diversified, you have to own something you are uncomfortable with. And many of us are definitely not comfortable with digital currencies. That said, however, with the launch of 11 spot Bitcoin ETFs in January, cryptocurrencies are accessible, regulated, and tradable on major stock exchanges. There are now large, established, reputable investment firms such as BlackRock and Fidelity offering diversified cryptocurrency ETF products, in addition to crypto specialists like Grayscale and Bitwise. Even historically conservative Morningstar is including it as a possibility in its portfolio structure recommendations, saying it should occupy just a small slice of a diversified portfolio and only if you intend to hold onto it for at least a decade before selling. Now, I am not throwing in the proverbial towel here, but I am facing the reality that digital currencies and the industry surrounding them are here to stay. Participating in a small way does add some diversification to long-term portfolios. Next week, Morningstar's mutual fund maven Russ Kinnell on the 100th anniversary of the mutual fund. What role do the centenarians still have in your portfolio? In this week's extra feature, Matt Hougan recommends his must-reads for investors. We would be delighted to have you follow us on Facebook, X, and our YouTube channel. Thanks for being here. Have a lovely weekend and make the week ahead a healthy, profitable, and productive one.